Hey everyone, welcome back to Corporate Decoder, the place where we help you understand the money behind the news. So the Trade Desk has just released their latest financial report, and let me tell you, the numbers are telling a pretty wild story, so buckle up. In this video, we're going to break down what really matters for this advertising tech giant. Before we dive in, hit that subscribe button and join our Discord community linked in the description for even more exclusive insights. Alright, so the Trade Desk is a big deal in the world of online advertising, helping companies get their ads in front of the right people across all sorts of devices, from your smart TV to your phone. Think of them as the smart traffic cops for digital ads. Let's start with the top line. Revenue went up to $694 million for the last quarter, and that's a pretty solid 19% jump compared to the same time last year. Over the first 6 months of the year, they brought in $1.3 billion, which is a 22% increase. This shows that more and more advertisers are using their platform to get their message out, which is great news for them. Now, to make all this happen, they have to spend money on their tech. Their platform operations cost jumped 37% to $151 million for the quarter and $80 million for the 6 months, which is also a 37% increase. This is mainly because they're spending more on keeping their systems running smoothly and investing in new data centers. It's like building more roads to handle more traffic. They're also spending more to get the word out and find new customers. Sales and marketing costs went up 20% to $161 million for the quarter and $58 million, or 23% for the 6 months. This includes hiring more people to sell their services and more money spent on advertising campaigns and events. It's a big investment to keep that growth engine running. Keeping their platform cutting edge also costs money. Technology and development expenses were up $22 million, or 22% for the quarter, and $49 million, or 22% for the 6 months. They are really pouring money into making their platform better and adding new features. Think of it as constantly upgrading their ad highway system. Now, surprisingly, their general and administrative costs actually went down slightly by 3% for the quarter and stayed almost the same for the 6 months. This is mainly due to a decrease in costs related to a special CEO performance option, which is a bit of a technical accounting detail, but overall it's good to see these costs being managed. They do mention that legal expenses for various litigation and governance matters did go up, so that's something to keep an eye on. So with all this spending, are they still making money? Absolutely. Net income for the quarter was $90 million. That's up 6% from last year. And for the first 6 months, they made $141 million, which is a healthy 21% increase. This means despite all the investments, they're still turning a profit. Let's talk about how much cash they have on hand. As of June 30th, they had $896 million in cash and equivalents, and another $791 million in short-term investments. That's a lot of money, which gives them a strong cushion to operate and invest for the future. It's like having a huge safety net. An interesting move here is their share buyback program. They spent a massive $697 million in the first 6 months of the year, repurchasing their own stock. This usually signals a company believes its stock is undervalued and is a way to return value to own shareholders. It also helps offset the dilutive effect of employee stock options. Now, for some of the more dramatic stuff, the company is currently involved in several lawsuits, one of which relates to a CEO performance option granted back in 2021. It seems like there was a disagreement about how that was handled, leading to some legal back and forth with shareholders. While the courts initially dismissed some claims, the plaintiffs have appealed, and it's still pending. There are also multiple shareholder class action lawsuits going on. These are usually triggered when there's a significant drop in stock price and shareholders believe the company made misleading statements. The complaints allege violations of securities laws and are seeking unspecified damages, all of which adds legal costs and uncertainty. This report also dives deep into the risks they face, especially around privacy and data protection. With all the data they handle, they're under a microscope from regulators. They mention evolving laws in the US and Europe like GDPR and new state-level privacy rules. These can mean more costs, more investigations, and force them to change how they do business, which is a big deal for an advertising company. Another massive risk they're facing is the changing landscape of online tracking. Remember how companies used to track you with things called cookies? Well, those are becoming less common. The Trade Desk is investing in alternatives like Unified ID too, but the uncertainty around how data will be used in the future is a major challenge. If they can't track users effectively, their whole business model could be impacted. Finally, they highlight the importance of their key employees, especially their CEO, Jeff T. Green. They also stress the need to keep attracting and keeping top talent in a very competitive market. Losing key people or failing to hire new ones could really slow down their growth. In summary, the trade desk is growing strong with increasing revenue and profits. They're investing heavily in their technology and sales to fuel that growth. However, they're also navigating significant legal battles and the ever-changing world of data privacy and online tracking, which are serious risks. Their ability to adapt to these challenges while continuing to innovate will be crucial for long-term success. So what's my take? The trade desk is a leader in a growing industry, but they are not without their challenges. The financial numbers show a company performing well operationally, but the legal and regulatory risks are substantial and could really impact them. They're making smart investments in their platform, but the data privacy landscape is a minefield they need to navigate very carefully. Alright, that's our breakdown of the trade desk's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.